Welcome back, everyone, to the Audacious Money Witch channel, where we talk about the magic behind the stock market. This earnings season for Lululemon is a make-or-break moment. The options market is screaming a 12% move up or down. But I'm not just watching from the sidelines. I'm buying heavy, over 200 shares deep into Lululemon. And I'm about to tell you exactly why I'm so confident this stock is about to make me and you very, very rich. And why I believe Lululemon is set to rival Nike's throne. You're not going to want to miss this. Now, before you call me crazy for betting big on a retail stock before a potentially volatile earnings report, let me explain. I've been tracking Lululemon for years. As a Buffett-style value investor, it's an incredibly easy business to understand, and I've finally taken a sizable position, over 200 shares. I'm even happy to buy more if the market overreacts. But why this massive confidence? It comes down to three key areas that most investors are completely missing. Number one, vested interest and insider confidence. First up, vested interest. When I invest in a single company, I want to see the leaders, the big money, with skin in the game. Are they putting their money where their mouth is? From their board of directors, Lululemon has directors that come from Apple, Coca-Cola, Facebook, Microsoft, Visa, LVMH, Disney, and Tesla. Let's dive into the insider ownership and transactions. At first glance, the insider transactions might look a little bearish, roughly 3 times more shares sold than bought. But remember Peter Lynch? Insiders sell for many reasons, but they only buy for one. They think it's cheap, and guess what? There have been significant buys. And the current insider ownership, still a very respectable 3.45%, that's enough for me to feel comfortable. But it gets better. Founder Chip Wilson is actively leveraging his shares for charitable donations, a bullish move showcasing his belief the stock will rebound. He wouldn't risk this if he thought it was going flat or down. And then there's the big whale, Michael Burry's Scion Fund. Yes, that Michael Burry from The Big Short. Nearly a quarter of his entire equity portfolio is dedicated to Lululemon. After his recent win streak with Chinese stocks, this is a massive green flag for Lululemon investors, and we can buy it even cheaper than his reported price. Resolution Part 2. Fortress Balance Sheet and Profitability. Next, let's talk about Lululemon's fortress of a balance sheet. This is a classic Ben Graham style equity bond play. Their current assets could cover all their liabilities. Think about that. Bond-like risk with equity-like upside. Half their current assets are inventory and cash. They can literally sell yoga pants without huge discounts to cover their entire debt. Their assets are tangible, real property, plant, equipment, inventory, cash. Less than 3% goodwill and intangibles. This means the return on assets, RONTA, of 24% is pure gold. Every time they expand, build, or stock up, they get a 24% return. And the profitability is off the charts. Retained earnings growing at almost 12% CAGR, flowing to equity, earning a mind-blowing 42% return on equity, ROE, but the king metric, return on invested capital, ROIC, Lulu boasts a 32% ROIC over 5 years. Charlie Munger famously said you can buy a great company at a reasonable price and your long-term return will align with its ROIC. So if we buy Lulu at a fair value, we could be looking at a 32% return year over year in the long run. That's insane. Resolution Part 3. Marketing power and brand moat. Now, for a retail brand, marketing is everything, and Lululemon is crushing it. Their SG&A is around 35% of sales, but they're getting incredible returns. From my high school days, Lululemon was the brand. It had that undeniable appeal, and they've maintained it by dominating where Gen Z lives on TikTok. Social Blade gives them an A grade for rapid follower expansion, and on Instagram, a B+ with steady growth. This isn't just about selling clothes, it's about building a powerful network effect, a desire for the brand to translate into massive demand. And the desire isn't slowing down globally. Google Trends shows growing topic searches peaking around the holidays. The biggest risk to fashion is going out of style, right? I see zero risks of that here. Lulu has built an impenetrable moat. Resolution Part 4, Undervaluation and the Nike Comparison. This is where it gets crazy. For years, Lulu traded at a premium. I always shied away, but now I'm in shock at how cheap this company really is, given its fundamentals. The most eye-opening metric, Lulu versus Nike valuation. Nike has far less global growth tailwinds, yet its EBITDA, is trading at 3x Lululemon's. That's not sustainable. What's more likely is Lulu closes that gap, potentially leading to 2 to 3x return just from multiple expansion alone. Even from a cash flow perspective, Lululemon is cheap. My simple discounted cash flow analysis using conservative analyst estimates and low 2.5% terminal growth rate still shows a fair value of $223. That's a huge margin of safety for a 9% return, and EBITDA hovering at 8%. That's deep value territory, a PE at a 30% discount to the sector and a third of the S&P 500s. With its bond-like downside, I feel safer in Lululemon than in the S&P 500 right now. Risks. Addressing concerns, strong reiteration. Now Lulu isn't without risks. America's revenue slowed to 3%, but that's like cyclical. They're counteracting it with massive 19% international growth and strong 8% men's growth, past capital allocation, mistakes, yes, mirror acquisition, expensive buybacks, but management still maintained a high ROIC. Competition? The customers who buy Lulu are completely different from the customers who buy a Costco knockoff. Chances are the knockoffs will only steal customers from cheaper brands and not from Lululemon. Furthermore, the Lululemon business model is quite frankly different to penetrate. And other brands like Viore and Alo Yoga simply don't have Lululemon's manufacturing, warehouse, or retail scale. These are all very capital-intensive ventures, which in turn produce impenetrable moats. These competitors will have to win by being asset-light and scaling in other ways, but I'm not sure how or even if it's possible. They would somehow have to produce a brand strength stronger than the Lululemon brand, marketing scale, and PPE combined. And even if they do get to that point, they will be subject to the same risk that Lululemon bears, employ brand erosion. There's a Charlie Munger inversion here somewhere. Other concerns that I've heard on the calls, some analysts are concerned with inventory increases. They are up around 15% from last year's inventory, but one can only attribute this to the tariffs. I actually applaud Lululemon here because they are being proactive in trying to stock up cheap inventory to sell. When tariffs ultimately get passed on to the consumer, they may be in a situation where they can benefit from such a degree. But if it does not work, they limit the downside of buying expensive materials overseas and then selling them at reduced prices, which would tank their margins for a couple of quarters. In my opinion, Lululemon took the highest win probability by stocking up on inventory. Being in athletic wear, they are less susceptible to major cosmetic design demands than typical apparel. Along with there being minimal shelf life, they have a better chance of turning over their inventory than others facing the same tariff challenges. In fact, I calculate the Lulu inventory turnover ratio over the last 5 years to be an average of $2.80. This means they replace their inventory around 3 times per year. This is generally more efficient than other retailers who are in the lower twos, thus less risky than other retailers. At the end of the day, Lululemon ticks every single box for long-term equity position. Insiders are vested. Balance sheet is a fortress, profitability is elite, marketing is dominant, and the valuation is finally on the side of value investors. This is a premium company offered at a non-premium price, and that, my friends, is an opportunity I rarely see. What do you think about Lululemon? Am I crazy for being all in? Let me know your thoughts in the comments below. If you found this deep dive valuable, smash that like button, subscribe for more in-depth stock analysis, and hit the notification bell so you don't miss my next big play. Thank you for watching, and I'll see you in the next video.
Retail theft is surging everywhere, but one premium athleisure wear brand is getting hit especially hard.
Bold, brazen thieves targeting Lululemon stores all over Houston, and customers have had enough.
For an employee to tell us it doesn't last that long, they're not violent, just hang out for a minute, normalizing that is just insanity to me.
Police say a Lululemon store on the Upper East Side was robbed of thousands of dollars in merchandise. Investigators releasing these images of the 5 suspects they're looking for at this hour.
Back in 2024, our CNBC investigation showed in some cases the thieves are part of organized retail crime groups stealing goods to sell for cash.
In just 6 months at the Hype Store, the Rice Village, and the City Center Lululemon locations, flash mob shoplifters struck 51 times.